I'm Luke Norman. I'm co-founder and chairman of US Gold Corp and chairman of Silver One that was just here a moment ago. US Gold, we are also in ownership of a fully permitted project. However, ours is a gold and copper deposit in the state of Wyoming. So about a 6-hour drive away from Nevada. In answer to your question, in our state, we will be the only hard rock mine in 100 years. So yeah, Nevada's full of them. We're first back in place. And yeah, we're going to be producing 110,000 ounces, which is a combination. We call it a gold equivalence, which is really, we're just valuing our copper production in gold ounces. I know that sounds confusing, but hopefully I'll explain it away. But a very reasonable size mining operation that is, we're probably one of the only truly fully permitted copper gold projects in North America in the junior mining company ready to go. So exciting times for us. We could read through that, Vion, but I don't think you do. We're going to focus today on the CK asset. CK project here, again in Wyoming. We do have a very big exploration project in Nevada, but I think it'll take up too much time to get into our exploration portfolio. Strong board of, I need to update my photo in case anyone didn't notice. Getting a lot of heck about that lately. Terry Ann's in the back. She's in charge of our marketing. This is why I have management front and forward on this. When you want to develop a mine anywhere in the world, you want someone who's dug a hole before and extracted minerals. So this gent here, who's our CEO, has kick-started some of the biggest gold mines on the planet. He worked for Barrick Gold Corp, along with a slew of others. So yeah, we have a real mine builder at the helm, and that's what you need for this kind of project. Another interesting little thing that'll be different between us and the other companies you may see tonight is we're NASDAQ listed, so very tight share structure. We don't have, like Silver One has upwards of close to 300 million shares out. We have only 14.4 million shares out. Why? Because we own a lot of the equity ourselves, management insiders, so we are very, very aware and cognizant of dilution. We want to make the stock work, not just have it kind of continually build and blow out. Where else was going to go on this slide? Just bear with me. Market cap of around 230 million, which is really quite low relative to what we have. And that's just because a lot of people didn't know our story the last 4 or 5 years because we were doing all the boring parts of the business. Engineering, permitting, I'll get into that. Now we're getting into the fun part, by the way. This little chart, this little roller coaster ride here is referred to as the Lassonde curve. So you either buy an exploration company here, and they make the discovery, and then you leave, and you come back in here. Well, we've gone through all the discovery phase. We are now in this phase here, so we're about to go into that part, the fun part again, of being a company in our industry. This table is all in reference to what's called a pre-feasibility study. So when we take a look at this mining operation, the potential mining operation, we do a whole bunch of drilling, exploration. We put that through a bunch of models. We work out what's it going to cost to build the plant, do all the work around it, and we spit out basically a sensitivities chart. So we know how much the plant's going to cost us to get this thing into production. That was in February of this year. That number's going to go up actually because we're just finishing a more comprehensive study. But somewhere in the realm of, let's call it in the realm of 300 million for sake of argument, to build it, and around $1,000 an ounce after we've built it and constructed and producing. So that's a very low number. It's called an all-in sustaining cost. Takes into consideration the build out, the operations, everything. At the end of the day, what's your kind of profit on that cost of producing gold? And we have just under a 1.7 million ounce reserve. Reserve is important because it's not a science test anymore. It's not just a resource. It's been all pulled together with engineering into a bankable reserve. And we ran these sensitivities at very low metal prices. Gold is almost double that. Copper is up around 25% of that. And it just turns out to be a highly profitable situation. Now, if you start to bring in metal prices like they are right now, if you start to use 4,000, the sensitivity chart, we didn't even bother showing that. It just gets, it starts to look even more impressive, I guess. Now, the reason why we can have such a low-cost operation, because the grade of the deposit certainly is not very high. I won't get into all that sort of minutia tonight. But we are 20 miles out of a township. So this is Cheyenne, Wyoming. Now, Wyoming is that square box there. Cheyenne's in the lower eastern corner of it. But everyone, I'm sure, has heard of Denver, Colorado. So if you were to fly into Denver, Colorado, in about an hour and a half's drive, you would be on our project. So this right here would be about the border between Colorado and Wyoming. So Cheyenne is the capital of Wyoming, and we have a captive employment audience. So there's a lot of workers. It's a resource state. So building a mine just so close to outside of town has so many more advantages than you would think. You'd think it'd actually be more of an impediment, but this is all pasture land out here. So we're near a water source. We have power nearby, and this highway system here, it's called the I-80 highway. It goes from Chicago out to San Francisco, passes through Salt Lake City, Elko, Nevada, and Reno, Nevada. Now, why are those cities important? Because they're major mining hubs as well. So all the equipment and the specialized personnel we need, anything we need to operate and run a mine is literally on this major rail and road network, 2.5 miles away from our project. We have paved road actually coming all the way to the project. We just have to run a little haul road out to it. So when that happens, you don't have to build man camps for people to entice them to come and work for you. Then you have to house them and feed them, ridiculous kind of salaries and enticing again people to come and work for you. Here, people are going home at night. The constructors of our mine are going home at night. We're not having to deal with those sort of costs. We don't have to deal with, again, if this project was maybe in Alaska or somewhere like that, you'd be building roads, you'd be having to pay to transmit power to it. The costs just start to stack up. Well, we avoid all of that again because we are right outside of a town. In fact, right here is a $50 billion plus materials company, and they have a similar kind of mining system to us, but they're not mining gold or copper. They're actually just mining granite. And they're selling it into a desperate market, which is down into Colorado, where there's huge amounts of construction, and by rail out to California. So they're running a fully profitable mining operation just selling rock. So we're very fortunate to have an endowment of copper and gold in ours. Simple mining, I mean, I won't get into great detail on this, but it's very simple. Like a quarry, we dig an open pit, we blast, we haul rock a very short distance, and then it goes through crushing, and we grind it up into a paste, like a sand. And once it's in that sand-like situation, then it goes into now what we call a flotation circuit. So it is similar to a laundry detergent, actually. It's fluffed through that ore, and the metals stick to that reagent, and it's literally then taken off and dried and sold as a clean copper and gold concentrate. So just a sand, essentially. And the remainder of the sand that doesn't hold any of that, well, much of that metal, there's still some left in there, is just loaded up on this tailings facility. Just to even give you a more kind of simplistic view of it, so pit here, it just rolls into a sorting pad, goes through the recovery circuit and hauled out along this road. Well, these tailings still hold some of the gold, which later on we'll try and approach with some form of secondary extraction method. But right now we don't need to worry about. What is interesting about this little plan view of the project is these two pre-sorted rock storage piles here. Well, if you remember back, if you're listening, there'll be a test later. I was talking about Martin Marietta, the multi-billion-dollar materials company. They are harvesting granodiorite and they're selling it into the marketplace as also they use it for everything from rail ballast to concrete additive. Well, as a byproduct of our mining operation, we have 40 million tons of that sitting at surface. So, okay, well, these guys are paying to harvest it and sell it. What's it worth? It's worth somewhere between $20 and $25 US a ton. And there is huge demand for that product right now. So we don't account for that in the economics of the project whatsoever, but what it's going to do is give us a playing card or a chip at the table with the final construction costs here. Because the guys who are coming in, we operate the mine, but we don't operate the exploitation, like building out the pit. That is done through contract mining. So we're in negotiations right now because we have $800 million to $1 billion worth of rock that somebody can have and help bring down the costs of the project even further. Also, the deposit's quite a lot larger than what we have in that reserve. The reserve is, again, a geostatistically defined, bankable, almost real estate amount of mineralization because it's had a lot of heavy drilling into it, so you understand a lot of the parts that are going on around the deposit. But that mineralization isn't cut off by our lack of drilling, it's just cut off by our lack of drilling. It continues to depth. So there's another 1 million ounces plus that we see below the reserve, below the deposit as it stands in our current 10-year mine life, which is that orange outline there, and it also continues laterally. So this, I guess where I'm going is that the expectation is this mine will operate a lot longer than the 10 years that we indicate in our economics. So, why is it a compelling opportunity? Because it's very simple mining. It's a very, very clean operation, very clean mining operation. I cannot harp on that enough. Crush, grind, float, just setting a dry concentrate off, no smelters, no dry stacks, any of that stuff. It's very clean. The proximity to the city, and ultimately we pay a royalty to the state, and it goes directly to the school board, so about 2.1% net smelter royalty. So good for the state in general. It's located on state ground. I did mention it's permitted. I didn't do a good job of explaining that, but getting permits for a mine in North America these days is a really long, arduous undertaking. Well, we're on state ground, so we dealt directly with the state of Wyoming. We didn't have to deal with the federal agencies. It's a huge difference, massive difference, because we're dealing with boots on ground people. I hope I don't make you all seasick here jumping around, but that's where the Department of Environment, that's our office blip, and across the corner from us is the Department of Environmental Qualities, and they deal with the air quality, water quality. Every single element that we had to go through on the permit phase was all done by an office that was very close by to us. So we could sit down if they had a question, we could take them through things. And a lot of things have been done around this project to enhance its, or the safety from a air quality, etc. Standpoint. But most importantly is you can see here as I blip out the land package, there's a water body there, and actually there's one above it here as well. Those are man-made reservoirs. They feed water into the township of Cheyenne. Those are grossly under capacity. They need more water storage. Well, we're digging a 86-acre by 700-foot deep hole, which would more than double that water storage. So post-production, even though the pit will be bigger than that, that's just the reserve pit, post-production, it's going to be tied into the state park and be used as a water reservoir. So lots of good things coming from this mine. Copper, gold, silver, and water storage. Actually, that's George B., our CEO, talking to the Bureau of Public Utilities about how our pit could be used. He's actually talking about the elevation difference. Even crazier is it'll be used as water storage, but as a backup, what they call a pump storage facility for a wind farm nearby. So it's a good way to actually contain power as well. And that's just more verbiage on that, just showing how originally, so in the build out of this mine, we factor in backfilling the pit. Well, most of this will not occur. It will just be handed over to the Parks Board. All right, lots of upside, as I said. Deposit's going to be bigger. We're going to get rail in there probably to start dealing with that bulk commodity, all that byproduct, which is the waste material, highly valuable, not accounted for, and lots of upside around the project. So, permitting, done. That is the most important thing you want to see out of a company that says they're going to develop a project. It needs to be permitted. We are. Advanced engineering. The numbers I showed you earlier, and I showed you $2,100 gold and what the thing shaped up and how the value metrics look, that is completely outdated. We've been running line-by-line studies, getting contracts in on every little different element, from putting in the foundation to getting electrical engineering done to plumbers to everything. And that is being completed right now and should be done mid to late December. So you won't see it in the marketplace till January. Obviously, we're not going to put it out over Christmas. Everyone will miss it. So all that advanced engineering is completed and just being finalized right now. We've taken a real good look at that waste rock market, and that's the aggregate market study. Because again, we've got somewhere close to $1 billion worth of rock that's been blasted, paid for, sitting on surface. We need to find a home for it, or somebody that wants to partner with us and make a home for it. Lots of interest in funding this. Okay, because think about it. I told you we've got a $230 million market cap. We only have, 14.4 million shares outstanding. But we have to come up with 300 and something million to build this mine. Well, why would I want to buy your stock? You have to dilute it. You're going to have to sell so many shares to do so. Well, no. We, again, care about the dilution of the company. So we're going to do as much or all of that through debt. Why? Because this thing pays itself off very quickly. I mean, in the current market environment, it would pay itself off in a year. So why would we want to dilute ourselves as equity holders, or any of you that become equity holders? We're going to make sure that what we do is accretive to the value of the stock. Water development opportunity, that's what I was referring to earlier. The post-production, when it's all done, when all the madness is over, someone still be shipping all that aggregate out, but we've done blasting rock and digging a hole. That will start getting filled with snow melt from the snowy mountains, and it will be dressed all nicely, and it will be brought into the park. So it's a pretty cool way, great legacy for a mining operation. So we are now here at a construction and production type scenario coming into the new year. How long does it take to build? Good question. 18 months. So once we have the money in treasury, 18 months and this project will be up and running. And why? Because it's just such a simple operation. I told you I wouldn't touch on the exploration, but I will just really quickly. If any of you have time, take a look at this Keystone project in Nevada. It is potentially a game changer. Okay.
Superb. Thank you very much. Very, very good. So you've tantalised us by saying it's only going to be 18 months construction once all the money and financing's in place. When might that financing be in place? So
that will kickstart off of the back. So how I pointed out, all the engineering is done. What we're putting, where is that? Right there, advanced engineering, is that moves into what's called a definitive feasibility study. So the document I showed you earlier from February of this year was called a pre-feasibility study, where we make a lot of assumptions. Now we go in and we get line items. So we get prices for the crushing circuit, prices for the grinding circuit, prices on, we're using this thing called a Jamison cell, which is a long story, but it means we need less space, less warehousing. So now all those hard costs are getting all put together in line items, because what that does is de-risks the project even further, So when we go to raise capital, we can say, oh no, this is how much it's going to cost to build. Because when we put out our pre-feasibility numbers in February and people saw such a low cost, under 300 million, they said a word that's B and S come together. They said, you're not going to be able to build it for that kind of price. So we're going to prove that out and straight into project finance. 1-2, same step.
1-2. Any questions for Luke? Questions?
Are you just concentrated in the USA, or are you thinking also expansion into other countries?
Good question. This project is ideal as a bolt-on project. So by that I mean we either bolt on more production or someone bolts us on for more production. But this is a great project to take somebody else's kind of in the 100,000+ ounce production range and create a bigger company with it. So long story short, we're definitely looking internationally, but right now, US is a good place to be because copper and silver, we produce gold, copper, and silver. I keep leaving the silver out. They're both critical minerals in the US now. And so creating a critical mineral in the US, it'd be nice to keep it all domestic and maybe get some more production in the US.
For the silver you're producing already, right?
No, the silver will come with the concentrate. So the silver is, actually I just had that question, I just asked that question to my geologist about half an hour before I came in here, but we end up with 2 million ounces of contained silver through the production scenario, which we don't actually value in any of the economics of the project. So there's $100 million worth of silver there.
Thank you. After raising the funding, how long do you think the return on your investment to be monetized?
So it takes 18 months so we raise the money, it takes 18 months to build the project. And then there's a little ramp up phase, about 3 months, and then it'll take 12 months. So, okay, basically 15 months from completion of project, 15 months, and the project will be paid for under the current metals price situation. Metals can fluctuate.
Thank you.
Okay, just final question from me. I know in Wyoming there is the 7th largest Indian reservation in the United States. I'm just wondering if you have to engineer relations with the First Nations. I know that you're giving royalties to education, but is that a consideration?
No, and not funnily enough, but it's First Nations in Canada. They're still called Native or Indian in the US.
Thank you.
So we are here. That's all up there. So when we did 2 major permits. One was the mine operating permit, which again, we are fully permitted. I could, if one of you guys lend me $300 million tonight, we'll start construction on this, will be in production in no time. We also had to do an industrial sightings permit. So we alerted the state of Wyoming that we're going to spend $250+ million building this project. It had to be a minimum 250 to do an industrial sightings. That's why I'm using. And that took about 8 months. All of it is full public disclosure. We put adverts in the local newspaper. We had a website that was promoted heavily in the township, which explained how we were going to blast, how much noise it would create, Doppler stations, wind current, everything was out there for the public to consume. And then it would go up, different parts of it would go up for 2 months into the public domain for people to object. And there's a huge amount of objection that goes, up around here, because that's where, it's the pretty part, I guess, of Wyoming. You always feel bad. Everyone worries about the dolphin, but no one cares about the tuna. Well, we're the tuna fish. So we received absolutely no objections to our permits to mine. And yeah, we got through that process quite nicely.
And I can hear that 300 million in your bank account already. Thank you
Yes,
very much.
ka-ching.
Ka-ching. Thank you.
Thank you, everybody.
Thank you.